Welcome back to the third video of the ETF Masterclass. We have covered a lot of ground in the previous two videos. In this video, we'll take a look at the different types of ETFs. ETFs come in different shapes and sizes. They can be differentiated in terms of their structure, style, and asset class. Let's first discuss ETF types segregated by structure. Now, ETFs can be physical or synthetic. In a physical structure, the ETF actually holds the underlying securities of the index that it is tracking. For example, an ETF tracking the Nifty 50 index will hold the underlying securities of the Nifty 50. On the other hand, synthetic ETFs are an interesting variant. Instead of holding underlying securities or assets, they hold derivative contracts like swaps to track the index. Now, don't beat yourself too much if you do not understand this. All ETFs in India currently have a physical structure, and thus you don't need to worry about structure. We just wanted to touch upon this for the sake of completeness. The next one, ETF types segregated by style. We can categorize ETFs based on management style. First up, passive management. These are ETFs that have been set up to track passive benchmark indices like the Nifty 50 or the Nifty Next 50. Second one, international ETFs. These ETFs hold securities that trade outside India. Example would be an ETF tracking the S&P 500 index. Number 3, thematic ETFs. ETFs in this category track sectoral or thematic indices. An ETF tracking the Nifty IT index falls under this category. Expense ratio of these ETFs tend to be a little higher than that of passive ETFs. Number 4, smart beta ETFs. ETFs in this category track a single factor index or a multi-factor index. Again, expense ratio of these ETFs are higher than that of passive ETFs. Availability of smart beta ETFs is now increasing in India, and interested viewers can read a whole blog dedicated to smart beta ETFs. We have provided a link in the description. Number 5, actively managed ETFs. In an actively managed ETF, the fund manager can take discretionary calls. The objective here is to outperform the index, not just track it. The most famous example of an actively managed ETF is the ARK Innovation ETF. Expense ratios of these ETFs are the same as actively managed mutual funds. Number 6, specialty ETFs. Leverage and inverse ETFs are two popular types in this category. Inverse ETFs go up when the index goes down and vice versa. In contrast, leveraged ETFs aim to maximize returns by borrowing and leveraging money. Now, the third type where we look at ETFs by asset class. Number 1, equity ETFs. These ETFs track equity indices where the underlying securities are stocks. These are the most common types of ETFs available in the world. Number 2, fixed income ETFs. These are ETFs that track the fixed income indices. Fixed income ETFs can further be categorized by number 1, type, which is a government security or a corporate bond, and number 2, duration. It can be a short term or a long term. It can also be a target maturity or a constant maturity ETF. The next one, commodity ETFs. These ETFs track the price of a particular commodity, gold, silver, oil. However, commodity ETFs are less transparent than index ETFs. Expense ratio of commodity ETFs are also higher than equity and bond ETFs. And the last one, currency-based ETFs. Currency ETF will either invest in a single currency like the US dollar or invest in a basket of currencies. To recap everything and bind together all that we have shared so far, consider an ETF that is tracking the Nifty IT index. Here the structure of the ETF is physical, with its style being thematic since it follows the IT index. And because the underlying securities are equities, its asset class is equity. Now, we have looked at various types of ETFs by style and asset class. The obvious question is, what type of ETFs are available for investment in India? We have tried to map the ETF availability in India through this grid. You can also check out this grid in our blog. We have provided the link in the description box. Well, that's a wrap for this video, folks. Hope you found it useful. See you in the next video of the ETF Masterclass. Bye-bye.